guys, it's Mbongen here. Welcome to 2025. This is my first official video that I'm sending you guys, and I hope you're going to enjoy it. It's going to be a quick one, but it's going to be a very fruitful video. So today we are going to be talking about neckline trade. We're going to be talking about neckline trade. I know there's a lot of variations to this, and some people might call this an order block trade. Some people might call it breakup block, mitigation block, whatever you want. It doesn't matter. It's still the same concept. But what do we mean by this? Right, we've got the market going in a certain direction. In this case, we've got the market going down. So the market moves down. So as soon as the market moves down, it simply means that this area becomes an area where you expect the market to give you a setup. So you expect the market to come there and then go down. So that is what you actually anticipate. And then the market goes down. So technically it means this area becomes an area where you expect the market to come back for a retest. And then again, the market comes back up to that area, retest, and then goes down. And again, the same thing happens on and on and on and on. That is the area where you anticipate the market to give you a setup. So this is the kind of setup that you'll be going for. It will actually make you a lot of money because you don't have to struggle around looking for peak formations and so forth and all that. All you need is just a cycle that has begun. All you need is just a move that has begun. And in this case, we are on the 4-hour time frame. So imagine what you could do with this on a 4-hour time frame, a D1 and a W time frame, and while it's taking your setups from the 1 hour, the 15 minutes. So maybe let's get straight into it without wasting time and see how this is supposed to play out. Right, so you've got a market that is buying right here, which is very good because it is buying. So what it technically means is that if this market is buying, you expect the previous high, the previous marked high or swing low to be the area where the market will form a setup. In this case, where you want to see the market bounce to is this area right here, right? And sometimes the market will get there, sometimes it will not. It doesn't matter, but that is exactly what you anticipate. In this case, this is the market moving right here, and guess what? The market does not come there. That is what I wanted to show you. So it doesn't matter, it's okay like that. But then there's something that's interesting which happened right here. So the market did come down up to that level, and then the market continued going up, thereby in this case taking out the high of that previous swing high, or you can call it a break of structure. It doesn't matter. So after the market has taken out that, so you would anticipate to see the market come back in that area and give you a setup. So you switch to the 1 hour or the 15 minutes time frame, depending with the time frame that you're dealing with, and then wait for a setup. So in this case, this is what happens. So the market comes back down to that area. You don't enter, you wait for the market to form a setup. So in this case, the market does form a setup, and all you see there is a nice W. If you want, you can take your trade from here going up and target that high, or target anywhere higher than that, or you can wait for the market to come a little lower than that. It's up to you, up to your preference, whatever you decide to trade. But that's the whole idea of a neckline trade. All right, and then when that happens, you then let the market go. So all you want to see is the market going up. So look at what I was talking about. You would have waited for the market to come back to that same low where it actually hit, which is this low right here. So that is where you would have expected the market to come down there. But eventually, what the market is going to do will give you a buy setup. Now, let's go and look at the 4-hour time frame and see how this looks like. So if you go to the 4-hour time frame, this is exactly how it looks like. You've got the market that went up and then came back down and gave you a setup and then went back up. That is exactly what how you would have taken this trade. Now, the same thing happens again because we've broken this high, it means technically this is the area. So you want to know the areas where the market will turn around. So this is the area where you'd anticipate to see a turnaround. Again, the market does it. You go to the 1 hour time frame. This is your setup right there. The market actually turned around in that area. So the market again does the same thing in the same area up there where you would expect to see your trade right here, and the market does exactly that. This is during the course of the cycling. All right, now I'm going to show you the setup that I took because I love taking these near peak formation. So this was the exact same pair, and what I had seen was something like this. All right, so you look at this. I've got an M formation. So I've got an M formation, and I'm looking forward to see the market come back to the neckline area. That's all. All right. I don't care where exactly. Yes, you can start looking for fair value gaps and so forth and all those kind of things, but all I'm looking for is to see the market come to the neckline. If I see the market get there, all I wait for is the setup. So here's the market coming to that area, and what happens now? Let's go to the H1 and see what we're looking at there. So this is H1. All right, you can tell looking at this entire thing that this market could be going up. This might look like a reset, whatnot, but I can guarantee you if 4 hours has changed direction, it has changed direction. Right now, look at that. This is what happened. Okay, this is what happened. Now again, in this same thing, if you were to get a re-entry, for some reason your stop loss was taken out, you could have taken your re-entry right there, right? If the market comes back to that. Okay, now the market does not come back to that, but the market does go away. So that is where I took my trade, and if you look at it from the 4 hour time frame, this is exactly how it looks like. This is exactly how it looks like. All right, now I'll show you another example. Maybe we can pick USDJPY and see what we see from there. All right, and I want to show you this on a full cycle. Maybe let's say we start from the full cycle right here. Right, so this is our full cycle, and the market is going down, and this is what you have. So because this is what you have, you expect to see the market come back to the neckline, right? And someone might ask and say, so which one is the neckline? I prefer to use this one. I prefer to see the market come to that area. You can use these ones, but I prefer to use that one. If the market doesn't come there, that's fair enough. I will let it go. All right. Now, that was the closest the market got to. Didn't really get exactly there, but that was the closest. All right, which was a very good setup, but unfortunately you could have missed it. So now if you have missed it, then it means your next area is this one. This is where you expect your setup. And what happens? There you go. Don't worry about whatever is going on. The market eventually does what? Pays you. So imagine all you're looking for is to see a W or to see an M, and then you take the M. And like I said, it doesn't mean it's going to be dead on the box. It will be around that area. That's where you'll be expecting it. Now, next, you expect your setup right here. All right, around that area. That's where you expect your setup. Let's see if the market will get there. So we do not enter until the market gets there. All right. Now look at that, look at that, look at that. You are in big profit. All right, all you had to do was wait for an M to form. Now if we go to the 1 hour time frame and look at this, this is where your M formation was, right there. So that's where you could have taken the M, or if you had entered here by mistake, still doesn't matter. It's not that much of a big deal. The market will still have gone with you. Now let's see, do we get another opportunity? We would expect to see something happen in this area. Let's see what happens. There, market comes for you, market leaves. So these are the simplest setups that you can do just by looking at the charts and saying, yep, I expect to see the market come back to that area and give me a setup. Look at that. All you're expecting is to see the market go down. All right. So it becomes so easy, guys, when you try and do it that way. Now, this doesn't mean you don't have to count levels, you don't have to look for bias, you don't have to what. It's helping you to understand where to anticipate the market reversals, where to anticipate good setups. I will show you the last setup that I traded this week. So this is a setup that I shared with my group, and this is how it was like. The setup, and that was a sell. So when we closed the week, we closed last week right here. So this is where we closed last week, and I anticipated the market was gonna sell, and my setup was based on that neckline right there. This is where I anticipated the market will come, and our TP was that low. That is where our TP was, and we quickly took that trade, and straight away it went down. All right, and hit our TP, and after hitting our TP, then it quickly went up. But that is how you can easily look for setups. Now look, even the same week, the market gave you a buy setup right there on the neckline right there. So that's how easy you can actually do this right there. Buy setup, market comes back down, test that, and then goes back up. The neckline trade will make you money, guys. And what I mean is, you need to sort of look at where the market is going and then just gauge that, okay, this is where the market is going, this is how I'm gonna enter. And you don't just throw yourself in, you wait for those situations and take them if price permits. So all you wait is for price to get to the area and give you a setup. This is D1 time frame. All you wait for is price to get to the area, give you a setup. Get to the area, gives you a setup. That's all you wait for, guys. Price to get to the area and give you a setup. So you need to see that M or W in that area, and once it happens, then you know 100% that that is the type of trade you're waiting for. So that's all that you wait for. Setups right there. This is D1. So imagine if you catch this on D1, and imagine if you catch it on W1. That's how good these setups are. Thank you very much, guys, and I hope you learned something today. Please do backtest this, find out if it works for you, and it's gonna help you and give you high probability setups, and find those markets that have moved a little bit on the 4 hour, on the D1. At least you expect to see the market that has moved this amount of movement, a peak, and has moved away from that peak, so that you can then expect it to come back and retest. All right, thank you, guys, and I'll meet you on the next one.